President Trump announced reciprocal tariff during Liberation Day on April 2nd. Soon after the announcement, the stock market had a massive meltdown. Market crashed on Thursday after the reciprocal tariff was announced against various countries. On Thursday, Dow Jones Industrial Average lost almost 4%. NASDAQ, technology-less NASDAQ fell close to 6%, and S&P 500 fell 4.84%. The market lost about $2 trillion on Thursday. The investors were very nervous and not sure what the next reactions are going to be based on the tariff policy. Is going to be equivalent response from various countries? Actually had expected somewhat moderate amount of tariff imposed against all these countries, but it seems like Trump looked at certain kind of formula and looked at 50% against all these various countries. Say, for example, he has applied 34% against China, European Union around 20%, and Japan 24%, Vietnam a whopping 46%, and India 27%, and so and so. And this fear on Thursday, after this announcement, China actually hit back equal amount, that they imposed equal amount of tariff against United States at 34%. Soon after that, the stock market had another complete rout on Friday. In last 2 days, the S&P 500 lost. After Trump had announced tariff on his Liberation Day, S&P 500 lost about $5 trillion. On Friday, after China had hit back tariff against America, Dow plunged 2,200 points, one of the largest drop in last 5-6 years. And NASDAQ index entered into a bear market, meaning the index officially dropped more than 20%. It sparks the worst meltdown since year 2020 in last 5 years. The NASDAQ fell 962 points, close to 6%. S&P 500 fell 322 points, close to 6%. And Dow Jones Industrial Average dropped 5.5%. Since President took into power, he took his oath on January 17th, the stock market all in all has lost about $11.1 trillion. It's all wiped out. $11 trillion from the US capital markets got wiped out because of uncertainty and other policy instituted is happening. I think it's mostly because no one knows the uncertainty. Companies, they are importing products from other countries like China. If they have to pay a high tariff, the producers, they have to pass on this prices to the consumers, meaning the consumers will have to pay more to buy those products, and it's going to be very inflationary. Some people are saying that if the Apple phone, iPhone, if they have to make it here in United States instead of making it in China, a $1,500 iPhone might cost $3,500 here in the United States. And similarly, other products, the profitability of these companies will be hurt, and the earnings are going to be adversely impacted, and that is why the stock market has been selling off without any respite. No, there is no buyers. Everybody is just selling and selling. The inflation, there are two things. If the inflation goes up and the profitability of the American companies, they go down, that gets into a stagflation situation, meaning low growth and high inflation, meaning it's one of the worst like combinations in terms of like stock market, and that is why the markets have sold off. And President Trump also pressurizing the Federal Reserve Chairman Jerome Powell, saying that the Fed should be cutting rates and they should not be playing any politics, and pressurizing. I've never heard like the president and other president has actually like pressurizing a Federal Reserve to like come and cut interest rates. The Federal Reserve is supposed to be an independent entity. When this tariff policy was imposed, Professor Jeremy Segal of Wharton Business School said that this policy is imposed by President Trump is one of the worst policy in the last 95 years. Please listen to his comments.
At finance at the University of Pennsylvania's Wharton School of Business and chief economist at Wisdom Tree. Good morning to you, Jeremy. We're always trying to get your wisdom in moments like this. You're often a calming voice. I don't know if you'll be a calming voice this morning, but as you see what's taking place with these tariffs, do you anticipate the market to turn around, or is this a falling knife that continues to fall?
Well, first, I want to pick up on what you said, Andrew, about the Smoot-Hawley tariff. I think this is the biggest policy mistake in 95 years. And
in the meantime, all the Trumps, some of the secretaries, they have come to the talk circuits this Sunday. Listen to this, Howard Luttnick, Commerce Secretary, when he was asking Face the Nation, CBS, that if this tariff policy, if that's going to be temporary or is going to be removed. And seems like it's going to be staying for at least not going to be removed anytime soon in weeks or months.
That's what they're doing. That's why they've committed trillions of dollars. They know this is the economy.
Mr. Secretary,
this is the place to go.
Mr. Secretary, the campaign's over. You won. So I'm asking what the plan is. So the Treasury Secretary said on another network, we're going to hold the course. It's not the kind of thing you can negotiate away in days or weeks. That makes it sound like the tariffs are staying in place at least for days or weeks. Is that correct, or is the president considering postponing implementation to negotiate?
There is no postponing. They are definitely going to stay in place for days and weeks. That is sort of obvious. The president needs to reset.
Federal Reserve Chairman Jerome Powell thinks that U.S. economy is doing fine right now, and that they're going to be in a no hurry to cut interest rates, and he will be watching from other data points before deciding the future course of interest rates. Please listen to what he says.
Level does not become an ongoing inflation problem. We'll continue to carefully monitor the incoming data, the evolving outlook, and the balance of risks. We're well positioned to wait for greater clarity before considering any adjustments to our policy stance. It is too soon to say what will be the appropriate path for monetary policy.
I checked the CME Tracker website. It seems like in the month of May, FOMC meeting, seems like the interest rates, they're not going to cut any interest rates, although the probability has increased a little bit by cutting 25 basis points. But the high probability is that they're not going to be cutting interest rate next month. But for the month of June, the probability has gone up to about 83%, meaning that Fed is going to be cutting interest rates. And many of these banks, other like Wall Street organizations, saying that Fed may be cutting 3 to 4 times interest rates in the coming in this year, and that may be actually like be helpful to the stock market. On Friday, BLS, Bureau of Labor Statistics, the unemployment numbers came up, And the payroll unemployment rose by 228,000, which is better than expected. Although the unemployment numbers has actually gone up to 4.2% from 4.1%. So there has been more people unemployed right now compared to the last months, but still the labor market is pretty strong. The other things are like notable is that 10-year Treasury numbers. I think on Friday the 10-year Treasury yield fell below 4%. From the high of 4.8%, meaning like about 80 basis points, yield has dropped, and that would be helpful in terms of mortgage interest rates, and it would help actually like to refinance their mortgages. It will be good, and as it has dropped from the all-time high. I made another video regarding the rise of gold prices. If you'd like to watch that video, if you like this video, please do subscribe and hit a like button. And I would appreciate if you'd give your commentary how you are navigating this extreme market volatility and market sell-off, whether you're staying on course or you think it's too much for you to bear and selling off, or you may be buying stocks at this market dip. Now at this time, what should we be doing in terms of this market meltdown? Stock market has fell good 10% or higher. NASDAQ fell 20%. So it may be a good time to buy in terms of if you have a long-term view that the prices have come down quite a bit. Stock market may not bounce back immediately, but if you have a long-term view and do some kind of dollar cost averaging strategy, or if you're really young, if you have a long time to wait for the market to basically grow, it may be a good time. But again, please do consult your financial consultant before you invest, because I'm just a YouTuber. I have no certificate or to advise people in terms of your finances. I looked into this particular in Vanguard, what really happens after bear market. So the Vanguard article says that bear market and the corrections are part of life. Keep a long-term focus. So it also says that there has been 12 bear market in global equities since 1980, but the market has always shown that equities typically post strong results over the long term. I have highlighted those areas where there's been a bear market, and after a certain time, market has always come back, recovered, and gone even higher. But in certain times, it have taken some time for market to recover. Please do your analysis, your risk horizon. I mean, if you're unable to sleep because of this market volatility, maybe it's not worth it to be invested in the market. So please think it over and make the right decision. That's all this video. I hope you like this. If you like it, please hit the like button, and I'd really appreciate. And thank you. Have a wonderful day.